We are so delighted this morning to host all of you to this Financial Inclusion Summit and specifically for this session and for this panel discussion. First of all, I would like to thank all the panel members here. This is one of the best gathering I see here. I think we already have introduced all the panel member. The format of this session is we'll spend around 35 to 40 minutes on this conversation and we keep around 10 to 15 minutes for the Q&A at the end. Before I start and going to all the panel members, I'll just throw some of the, might be in terms of the, I'll put up some context here. When I was discussing this with the panel member, one of the panel member has articulated this thing very well and I want to share here. So basically when we talk about agriculture, we are talking, it's all about the, or you can say it about the farmers. But when we talk about the Indian agriculture, it's all about the smallholder farmers, right? So, and this is the segment, and if we talk about the numbers, there are 130 million farmers, and out of that, the majority of the farmers are basically smallholder farmers. And in terms of the opportunity-wise, this is a $1 trillion total addressable market altogether. So it's a huge opportunity, and through this panel or this conversation, we want to understand like the persona of the smallholder farmers in terms of what are the, we already have two founders here, how they are leveraging the technologies and coming up the solution around that. And also in terms of what are the opportunity, we have a investor, they are one of the largest and even one of the oldest investors investing in this particular space, and Mark is representing here. If you talk, even if you talk about the smallholder farmers, and this is a huge opportunity, at the same time, this is a farmer group. They are vulnerable to the climate events and even a lot of market condition. And there is a need, and that's why there is a need for affordable credit and insurance product, which can provide them a safety net to this particular persona. Today, these farmer groups are facing or encounter a lot of challenges, and just to note down a couple of, there is a totally unpredictable income they have due to the yield and the market risk. If you look at the cash flow perspective, cash flow is concentrated at the harvest, but at the same time, cash outflow is throughout the cropping session. Access for a long-term finance, either in terms of for the infrastructures or equipment, is very limited. Farmers are skeptical to the extreme financial distress event like crop failures, fall in market price, and even sometimes for a death of the livestock. And there is a limited availability for the collateral for this secured finance, right? So these are the challenges in terms of they are facing. And if you look at all these challenges, I think there is definitely opportunity if we come up with the solution around that. With this, I'll start this conversation. I'll first go to the Arjun. Arjun, if you can basically first give us the, your journey in basically building the product solution at Jai Kisan. And also if you can talk about your learning in serving this particular customer persona, which is a smallholder farmer.
Sure. First of all, thank you so much for having me at this event, and thank you for putting such a fantastic event together. Everyone, good morning to all of you, and I think I'll just take a quick step back and walk you guys through as to why and what we do here at Jai Kisan, and then bring in and weave in that consumer kind of persona as well. I'll just walk you guys through a little story as well in the process. There's an area in Bombay called Dharavi. Most of us cross it when we land. About 25, 30 years ago, when I grew up in Bombay, I definitely was not allowed to go to Dharavi by my parents, right? But even the law enforcement won't go to Dharavi wearing their uniforms. Fast forward to 2018 plus, there are more than 500 collection agents of various finance companies that lend and collect money in that particular market. Let that settle in for a minute. Folks, businesses have been able to revolutionize the way the urban poor interacts with financial services and also consumption products, right? A Xiaomi was a company none of us, and I may be pronouncing it very, very horribly, but Xiaomi was a company none of us really knew of in 2014, 2015. Today, I would be highly doubtful that someone here doesn't know of Xiaomi. In 2014, 2015, the people that worked for you in urban India, your mates, your drivers, folks like this, didn't have access to consumer durables. Today they do. How did this all come about? One finance company partnered up with one consumer durable company and said, hey, there's a wave of consumption coming up in India. Do we want to facilitate that wave? At that point as well, someone could have said, hey, do you really want to lend to these people? Why don't you just lend to the top 1%, which is huge in India, and build a fantastic business there, right? So I think in comparable to that, Adriel and I said that, hey, if we can lend to the urban poor in markets like Dharavi to buy a cell phone with which they will not generate an income, then why can't we lend to Rashida, who's a farmer in rural India and is looking at buying seeds, pesticides, fertilizers, and probably a rotavator to be able to generate that income, right? And as we get into that process, right, we think about the customer persona, yeah? And at the end of the day, what we've understood, obviously the lending business is all about collections from the lending side, but it is how do you kind of run the right kind of narrative to this customer segment. Today, folks in Dharavi know what CIBIL is. They don't know what it really means. It's a credit bureau, it's a company, what is it? They don't have an idea about that, but they know if they don't repay a loan, their CIBIL will get affected and they will not be able to retake that loan. How do we run narratives like that becomes very, very important. So A is narrative, right? B is access. Can we provide a seamless customer journey to that individual farmer who's walking into that store, buying a product on credit and walking out? Because let's please understand today that farmer walks in, says, sir, मेरे को ये माल दे दीजिए और मेरे खाते पे डाल दीजिए, and they walk out. It's frictionless, right? How do you create a customer journey that's frictionless like that, like it's been replicated multiple times in urban India, right? And then how do you engage with that customer going forward? Because as we understand, smallholder farmers have long gestation periods, right? And this may be across industries, yeah? So that they don't forget that, hey, this was a loan that was given to you, right? You need to repay this. And there are various sorts of advantages for you to repay this. For example, you'll get into the digital footprint, you may get a higher size of a loan, you'll get access to insurance and savings products, right? So I think that is how we've largely tried to be able to engage and interact with the customer and bring our financial services to them over the course of about 35,000 merchants across 9 states in the country, across 7 lakh individual farmers, out of which we lend to between 1 to 1.25 itself. Thank you.
And Arjun, in terms of, you started in 2017, right? And where you are right now in terms of, if you can talk about the disbursement and the number of farmers you, or might be even all the stakeholders within the whole value chain you have served so far.
Sure. So in 2017, we actually moved to a village, right? It was October of 2017, and the CII team obviously was a fantastic supporter through that period. We moved to a village, we sold agri inputs to farmers over a course of about 8-9 months and tried to figure the business model that we wanted to kind of develop. We disbursed our first loan in November of 2019 after integrating with a financial services institution, right? From there, we had a scale of about 220 odd crores, which is what we disburse on a monthly basis, okay, right? 35,000 odd merchants use Bharat Khata actively, right? And as I mentioned, we engage with about 7 lakh farmers, out of which we lend to about 1 to 1.2 of them at any particular period of time.
Got it. Yeah. Thanks. We have a Jatin. They are one of the leading insurtech companies in this space. Jatin, if you can, basically, I have some older numbers, but you can correct me. Gram Cover has presence more than 22,000 villages. Settled more than 1 million claims. There are 2 million customers they have enrolled so far. From your side, I want to know, like, this is big numbers, and especially working in this tough sector. How you have scaled, how your journey and the scaling part of the thing, if you can talk about.
Thanks. My journey is slightly different. So I come from a weather background. I was funded by Mark about 10 years ago. And I understood monsoon, so I basically see myself as somebody who understands climate finance. And because for a long time, 12 years ago. So, and because of that, we started providing a lot of data to government. And who does climate finance more than government, both from the KCC side, as well as what is today called Pradhan Mantri Fasal Bima Yojana, has had different avatars over a period of time. And I understood that if you want to, so there are two ways of looking at it. Do you want to collateralize the weather, or do you want to underwrite the weather? When I mean weather, I'm talking about Kharif and monsoon. And of course, now that means temperature in Rabi. So after providing data, I understood patterns, and I basically understood two things. One, insurance is a push product. It's a tough one to solve in urban, let alone rural. If there ever was a chance of rapidly expanding insurance distribution in rural India, it would be on the back of a government policy. And that's what we did. So basically, we got into the Pradhan Mantri Fasal Bima Yojana. We scaled it rapidly. We have about 4 million farmers, and we've been doing it year on year. We started doing parametric insurance against drought, excess rain, pest. We did germination insurance. And then we layered other layers of general insurance lines, because you started getting, you built a distribution, you built scale, you built technology, you built a lot of transactional data, and then we layered auto, life insurance. Now we got into health insurance for urban poor and semi-rural. And right now we are just concentrating on insurance. And as Arjun was saying, consumption is going to grow. And I see, in a sense, you need to look at insurance also like an FMCG product. You only buy insurance once you cross a level. I'm talking about general insurance, I'm not talking about crop or weather. A level of income. So then you need your health insurance, you start subscribing to your life insurance, you do your auto insurance. So now, we are at a scale where our motto is Gai se gadi tak, from cow to car. We do cattle, we do weather, we do life, and we basically now have a flywheel that we are replicating.
Thanks, Jatin. We have heard, and we have discussed about this a large opportunity which Jai Kisan is attempting as a lending pro in this space, and Gram Cover is on the insurance side of it. Now I'll go to Mark. Mark, you are one of the oldest and even largest fund operating in this space. You are pioneer in this space altogether. I also have read one of the article recently where you mentioned about rural fintech is going to get momentum in 2023. And so basically I want to know more. Can you decode this and also talk about very specific opportunity you see? Might be it's helpful for the people who are here, want to start in this space. Yeah, over to you.
Hi, everyone. It's great to be here and a terrific event. So obviously, the fintech ecosystem in India has evolved massively over the last decade, and especially in the last 5 years. There have been pioneers in what we call AgFintech, and two of them are really on this panel. Gram Cover is vintage 2016, and you guys are vintage 2017, and so I guess you would add Samunati to that. But when we look going forward as Omnivore, where we see interesting opportunities in AgFintech, I think a couple things come to mind. One is there is still a huge opportunity in what we think of as embedded fintech, which is to say that it makes a lot more sense. These are really being built in B2B marketplaces, where in addition to the supply of product, you provide credit for that and institutionalize that credit. And so we see that in portfolio companies of ours like, Agrim and Agrizy. But there are many others that are, and AquaConnect, that are essentially embedded fintech plays, and we think there is huge scope in that space. I think in the area of direct farmer lending, there is an interesting opportunity for, servicing rural households with income levels of, say, anywhere from 3 to 10 lakh. Right, which is to say above the level of microfinance, below the level where necessarily, larger financial institutions would come into play. And there's some interesting people out there like Sarvagram that are trying to serve that demographic. But, it's a very, very big space and relatively underbanked, and you know, we would expect to see more entrepreneurship there. And call us if you start. There will be more opportunities in InsurTech, but I'm going to very much defer to my friend and investee Jatin to talk about how that space is going to evolve. And I think one of the interesting things that we don't see, Madam and I earlier were talking about that, you know, sometimes you expect to see startups in a space, but they're not there, is the space of commodity risk management, right? If we were to take a step out of India and look when people talk about, you know, fintech opportunities globally, people think of credit, people think of insurance, people think of savings and investments, and people also think of risk. We haven't seen that yet. Obviously, you know, India's had since the days of the FMC forwards and futures, but they're not really retail products for farmers, despite the best efforts of folks like the NCDEX. It would be interesting to see whether through traded futures, the ones that don't get randomly banned, or through forward contracts that are more bilateral, whether risk products could be built for rural that don't currently exist. And obviously there's a regulatory angle to it, but that's a space that we're hoping to see. There's a person who works for a large AgriTech that I've been trying to get to quit his job and do something in this. But it's certainly a space of interest. And then finally, the space of rural savings, I think, is just beginning to take off, rural savings and investments. Last few years, I guess there's been KaleidoFin, though they're as much urban as they are rural. And there's some new people that are coming up in that space, essentially saying that given the variability of rural cash flows, what you want in terms of investment products for rural need to be, and savings products need to be different than the products that really have been designed for urban India. So that's kind of our landscape. Obviously, there are things that we're going to leave out and other opportunities, but that's what we're excited about right now.
Mark, if you can also talk about or you can say categorize when we talk about the small farmer or smallholder farmers, in terms of how you define them. At the same time, you see the very specific solution can be built specific to only addressing the farmers, not like a lot of solutions are right now on the value chain perspective. Or any opportunity you see over there.
Sure. So I generally don't like to get obsessive with the term smallholder farmer, which I feel is an overused and abused word. Because the reality is, if you have 2 hectares of bananas in Chalgon, you're pretty good, okay? And if you have 20 hectares in dry land, unirrigated, it's not so great. And so I don't think the landholding approach is necessarily the right approach. There was a very good national survey that was done about 6 or 7 years ago, breaking down various rural incomes by landholdings, and except for the top, I think, 5 to 10%, even, you know, folks in having 5 hectares of land can still be at the UN's definition of poverty. So I think it's not a useful tool. I think with respect to the question of, okay, well, you've got some people financing value chains, and then, we're talking about farmers making 3 to 10 lakhs, so what happens to the smallholder farmer? I think in practice, there's a couple avenues. One is that you're starting to see full stack farmer platforms like Dehat entering into financial services with a focus on smallholder farmers, where it's a form of embedded fintech because there's already an existing relationship of trade. So that, I think, is one angle. And then the second angle, and I would be curious what Arjun thinks about this, is whether when you're lending to a dealer and lowering their cost of interest, whether any of that savings gets passed on to the farmer, or, as I suspect, the dealer just makes more money.
Thanks. Thanks, Mark. Ma'am, you represent NABARD, and all of us know NABARD is the ecosystem builder for the rural market or rural India. And you also represent earlier, specifically NAB Kisan, which is more focusing on the FPO. I have a very specific questions on FPO side of it. So when we look at a lot of basically a deck or might be a lot of business plan we received, a lot of people also talk about, like whenever they talk about might be agri, they also talk about very important pillar is FPO, because through FPO they want to channelize, right? So how, from your side, I want to know in terms of how this FPO ecosystem today look like. If as an entrepreneur, as a company, I want to work with them, what are the things I should be more mindful? Yeah, so something on that line will be helpful.
Good morning, everyone. Thank you so much, Vipul, for giving me an opportunity, and very glad to be here among the panelists. A very pertinent question that you have raised in the context of small farmers. Yeah, I do agree partly with what Mark has said about the definition of small farmer. If you look at a small farmer in Kerala and you want to look at a small farmer in Bihar, yes, we cannot put them on the same platform. And that is the case with different states. But when we build policies for the nation as a whole, then we generally adopt a holistic approach. And when we talk about Indian agriculture, as Vipul in his opening remarks mentioned, that it attracts your attention towards the concept of small farmer. And yes, when you want to look at agriculture as agri-business, and you look at India scaling heights in terms of $5 trillion economy or $40 trillion economy later on in 2047 or whatever it is, with 60% in the rural areas, then the policies obviously have to be different. And in this context, the FPO concept was sort of launched by NABARD, tried and found successful. And thereafter, Government of India came in and came up with an announcement on a mission mode of 10,000 FPOs. So whether 10,000 FPOs has any sanctity, whether this is enough or not enough, that's a very different topic. I don't want to get into that aspect. But you said yes, FPO. Yes, I am a fan of FPO. And I also say that FPO will stay on and give us time for about 10 years. Every concept to get stabilized and get embedded in the field, it needs a lot of time, and FPO is a social community-based organization where a lot of capacities have to be built and so on and so forth. Why I say so is that is the only platform where the small farmers can be brought together. All the problems of the small farmers, the challenges, and also the opportunities that are available can be made available only through an FPO. And they, on an average, they have about 500 to 800 members. And it's a beautiful space now. As you say, NABARD is an ecosystem builder. And this is one of the latest steps NABARD has taken in building the FPO ecosystem. Today, when we find large number of startups in the country, irrespective of where they are, what they do, when they want to have trials in the field, obviously, they'll have to try out with few progressive farmers, if at all they have to try out. And I don't think if they try out with a few progressive farmers, you would say that, yes, the tests are fine. Because the opportunity or the trial should meet the need of the small farmer too. And it is next to impossible for a startup to go to a small farmer. And the best reach is the FPO. And we are already seeing signs of, I won't say success, but I'm seeing signs of lot of positivity in the segment where the startups are being linked to the FPOs and they are trying to understand the problems and they are trying to iterate their innovations to the startups. And we have supported a couple of incubation centers and we are encouraging the startup FPO immersion programs in which the startups have begun understanding the problems of FPOs. FPOs have started appreciating the benefits which the startups are bringing in, and parallelly both of them are growing, and parallelly the solutions for the problems that are coming up on both the sides are being addressed by institutions like NABARD through various forums, through various activities, and we have a training establishment called Bankers Institute of Rural Development, which is spread across 3 states, which caters to 3 zones of the country, and that's how it is. I think as we go forward, I'll answer your questions.
And ma'am, just adding to that, if you can also talk about, so these FPOs, when we look at across the country, there are FPOs doing fantastic job, there are FPOs trying to attempt, and there are basically FPOs still not able to figure out how to either model at the same time, how they can work with these private companies, right? So I want to know from your perspective in terms of what are the real challenges these FPOs are facing, and that's where I think it will take its own time to come up with that ecosystem ready for startups to start harvesting. So any specific 1 or 2 challenges you might have seen on the FPO perspective they are facing?
Yeah, the basic challenges, as I already flagged off, they are community-based organizations. So what if they are registered as a company under Companies Act, but they are community-based organizations, and as is the case with any community-based organizations, people are always a problem, bringing them together. And that too in rural areas where there's a lot of politicization is what we have seen in the cooperatives over a period of time. So that is what we sense in the FPOs also. And this is exactly where we have rolled out a lot of training modules for the board of directors. Governance is a big issue. The appointment and the selection of the chief executive officer is another issue. The mobilization of share capital, that would be the bedrock for an FPO to set up, like to kickstart some operations. That is an issue. Then a lot of issues of input suppliers, procurement, and so on and so forth. So there are many issues, so I can't say which are the main issues because every context and every place has a different issue.
Got it.
That's it.
Thanks.
Yeah.
So now I have a question for Jatin and Arjun. So you are leveraging a technology a lot in all the product what you are right now built and you are actually serving to the customer. Want to know more about in terms of how you are leveraging technology at the same time, which are the basically emerging technology you see as very clearly a use case and might be even the scale, the way the adoption of the product you have right now. Jatin, you want to go first?
Sure. So let me talk about legacy first. So I've leveraged a lot of, so we've got the largest warehouse of weather data in this country at a very high geographic resolution. We've got land records from about 7 states with changing titles and mutation real time. We've got a lot of satellite imagery, crop identification, crop classification, connectivity to markets, power lines, you name it. But we've also built, so really I think, but I frankly feel that insurance transactions, and I do not know lending, so I should not comment on it, are complex transactions. And there's a lot of back and forth on it, so we have a phygital model. I frankly believe that the way ahead, and the fact is that, when startups get funded, they start throwing money, and you can see market growth, but might not actually be leveraging technology. So how do you get over those peaks and troughs of finance? It's convenience. And I think the future of convenience is using imaging technologies tremendously in terms of, for example, we do a lot of livestock insurance. And the biggest problem, both finance as well as insurance, is the asset itself. Is it there? Is it not? It's full of fraud, both on the lending and insurance side. So we're launching something called Guy, in which works pretty well. We've done it, tested over thousands of animals, muzzle print, right? If you want to finance or if you want to insure this is the cow and this is the only cow. So doing those things. Second, I think we are looking at the end of apps. Apps are extremely inconvenient. Why not put everything on WhatsApp for business? Purely chat, AI enabled, which gives you the contextual data for the transaction you want to do, rather than boxes, requires literacy, understanding, and interpretations. And I think there was a panel before this. We have invested a lot of effort, time, and money on voice enablement to be able to really answer the question that my literate, semi-literate, or from an accent perspective or from a language perspective, I'm working with somebody who speaks Maithili. Can I service that person in Maithili using a language-based AI? And Gram Cover is going to roll out a lot of that this year, and it's going to come out in pieces. I think once you figure out the interface, the underwriting and the risk management will keep on changing. But I think the interface is the one that is key in really growing this market.
Yes, thanks, Satyan.
Very, very interesting points that have come out in the past 10, 12 minutes, right? And as I kind of answer your question around the technology piece, I'll also try to weave in the response to Mark's question, which was extremely pertinent, right? There's a value chain. Now, how do you leverage technology and how do you leverage value chain actually are very weaved into each other for businesses like ours. It is about being able to bring in the right touch points across the value chain so that you have the right kind of visibility, but also the right kind of control so that you're able to pass on the savings in whatever form they are generated, lower cost of interest or lower costs anyway, or lower overheads and things like that, to the end customer. We provide 3 technology solutions today, right? One is to our lender partners. The other is to our corporate partners, right? And the third is to our middlemen partners, right? These are either dealers or suppliers. On April 1st, we will also launch a technology solution for the individual customer. Right? Thus far, why have we gotten it this way, right? Folks, merchant credit in India is an expectation by the customer. It's not a service. And that's the India phenomena, right? I believe here everyone is, pretty well off on liquidity. But if I just ask you when you pay your milkman, majority of us pay them at the end of the month. But that fellow is expected to come and deliver milk every day, 30 days of the month, and we'll pay them on the 31st day, right? We go downstairs to a kirana store, and we say, "Aap pani ki bottle de do, ek chips ka packet de do, aur khate pe dal do." Right? What does that mean? That basically means that merchant credit is an expectation, it's not a service. And one way to kind of, progress on this is the credit card, right? So I think to get to the farmer, there are 2 obstacles for most folks, right? One is CAC, the acquisition cost of, kind of onboarding that particular farmer. And number 2 is the risk that runs on that particular farmer or that particular product that you've sold to them. Now, there's this particular dealer who's interacting with this farmer for decades and decades and decades, over generations, generations, and generations. And they've lent money to them over cycle, and cycle again. So who better to leverage to underwrite that farmer than that particular dealer themselves? But yes, going back to my original point, you have to use technology to be able to A, have the visibility, whether that's actually happening, and number 2, the control whether that's actually happening. Mark, we actually started giving financing to these dealers at cheaper interest rates. And what we saw was, forget them passing that on further, they were actually using capital to invest that in other opportunities that they were finding. Right? And now, we brought in technology to be able to ensure visibility and control. We operationalized the first ever checkout financing at these dealer outlets. So now, we didn't give the money to the dealer as a loan, expecting them to pass it on further. We actually gave it to the individual customer against a product that the dealer gave to them. Right? And in the process, we brought the dealer in the play by being able to get some sort of guarantees from them, because at the end of the day, the farmer segment or the community, they know the best of, right? And in that manner, we hope to be able to kind of get visibility across the value chain. But again, to your point, Mark, I think get the value to the individual customer. We are super excited about getting this technology app out to the individual customer very shortly, because today our journey is an assisted journey. Think of how a Bajaj Finance, you walk into a Xiaomi, Chroma, or an Oppo store, you buy a particular phone, and you get it financed by that particular lender. Very similar journey, we are able to do it within 10 minutes across 9 different languages. right? And KYCing a rural Indian folks is relatively hard, right? Because their, Aadhaar has their name in a particular way. For example, mine would be Arjun Anil Aluwalia. My PAN card will be, Arjun Aluwalia, and my license will be, Arjun Anil, right? And as you go south, that just becomes a more complicated problem. And now you have to match two IDs. How do you do that, right? So small problems like that, how do you kind of win them over, becomes very, very key. I think that's with regards to the technology piece and what Mark brought on. I think just to add, ma'am, on the FPO piece, right? And I think we've had a little bit of experience on that side. And I think what has, not possibly worked very well there, which is something that everyone's trying to make work, as you said, is on the governance piece, right? But I throw a different take on that, right? Who's incentivized in the FPO?
Yes.
Who's supposed to make money, right? Is it just the community? What about the management, right? It's not a private company. So are we expecting the management to run an NGO here? Let's be very clear about that, right? Or are we expecting this management to run an actual for-profit company in which way they will have to be remunerated in that manner as well and compensated in the manner? Unfortunately, today, that's slightly unstructured, and that is where you see various sorts of governance issues come out, where folks look at building, an organization like that to be able to kind of leverage their own personal interests and things like that. Right? So I think that has been our biggest learning on that side as well. Thank you.
Got it. Thanks, Arjun. Mark, here, when we talk about the emerging technology, right? And emerging technology, we can able to fully basically utilize if we have a basically accurate and enough data set, right? So when we talk about like agri, again, we talk about lack of farm level data, inaccurate land records, absence of some of the framework in terms of the way we capture data, like a ground truthing and all, right? So the way whole digitization happened for some of the sectors, let's example what UPI did for payments and what ONDC is trying to attempt for the commerce. Do you see something very specific for this sector and a lot of people, whatever they call as agri-stack equivalent? So just want to know from your side how you look at what kind of framework and what's your view on that?
So I think the union government is fairly clear that this is a priority, that the agri-stack is a priority. Krishi Bhavan is working on this actively. And I think there are a few pieces to this, the same way that the India stack was Aadhaar, right, Jan Dhan, and mobile, right? The pieces of the agri-stack seem to be, number one, farmer, right? And that's the linkage, so farmer to their PAN card. Then parcel, land parcel, which is obviously a very, very, very complex issue, and Jatin has lots of thoughts on it, because who owns what parcel is A, complicated, B, more or less a state subject, C, the regulatory captive territory of a patwari in most of India, and contested. So second piece. And then the third piece is all of this other information, which I'm not exactly sure why they're spending as much time on. They want to say, okay, what is growing here, which I think is fine, but I think linking part one and part two is hard enough without spending a lot of time on part three, which anyway, through remote sensing, as those technologies evolve and as we get hyperspectral through folks like Pixel, right, will sort of resolve itself. But they, no one in the government has ever seen a list they didn't want to make longer. So, we've added this other stuff over here about what's happening, right? And then what's close by, where are the dealers, where are the fertilizer shops, right? It turns into this like infinite problem. Just the first two pillars are a frickin' nightmare to actually interlink. But it does seem like work has commenced, things are moving forward, but all of it's going to come down. We have an Omnivore founders WhatsApp group, and Jatin and my co-founder Janesh were debating this earlier this week, that all of this is going to come down to carrots and sticks, right? Because fundamentally, no state is going to voluntarily do this unless they're politically allied to the union government, right? So there you go. But, and politically allied meaning from the same party. I don't even think allied states will necessarily jump on board that are part of the broader NDA. So you're going to start seeing this in BJP states first. But the question from there is, what can be done to either incentivize or compel other states to do this, right? So for example, if you take the program PM Kisan and you take it from, I guess they've hiked it now from 6,000 rupees, but if you take it and say it's 12,000 rupees, but by the way, we're only going to give it to you if you've interlinked your land parcel, which you've signed off on, to your, Aadhaar. Doesn't matter who's ruling the state, right? You've got a hell of a lot of incentive to do it, right? Or you do the other thing and withhold funding to states that are non-compliant on this kind of stuff, right? There's all sorts of clubs that can be wielded. Let's see how long it plays out. Obviously, the other factor is that about 10% of rural land is legally contested, and you can't magically snap your finger and settle old lawsuits, and court cases overnight. So, but I think it's becoming a reality. I think as it becomes a reality, it'll be interesting because this is something that a lot of companies have had to do themselves. No one's that great at it. This is kind of a public good and should be a public good. I think less of the third pillar of all of the other stuff because it's so dynamic, right? The fact that, Jairam has a fertilizer store at this location, I'm not sure that needs to be in a government centralized database because he could move it next week. Whereas land, farm to farmer is much more important. The thing that worries me is, and bothers me, is that there was no, in a recent briefing on the AgriStack that we were part of, there was no mention of a distinction between the land owner and the land cultivator. That's a problem. And actually that should be the third pillar of the AgriStack, right? Who is this person that owns the land? What is the parcel of land that they own, and who the hell is managing it, right? Because in theory, we should be giving subsidies not to a zamindar, but actually to the person plowing the field, right? Who's doing, and so in that sense, I hope that gets fixed. But that's kind of where things seem to be. It is happening.
And what role, Mark, you see you are a pioneer in this space, what role you see as an investor in accelerating or might be shaping this whole, because I think that can unlock a lot of value for a farmer as well as the startup ecosystem.
I think the biggest thing from an investment perspective is land is going to become a more liquid asset if this happens. Right? You've already started seeing the beginnings of, we had one form of land reform in the 50s, right? Which was essentially breaking down the zamindari system and distributing land to the tiller and all of that. Might have gone too far. And we're, I think, moving towards new reforms that sort of say that people that own agricultural land should be able to sell agricultural land. They should be able to lease agricultural land. There should be land management companies, right? There's a lot of captive, underutilized assets in agriculture. If you go, let's do an audience survey. How many people here have family land in farming? Yup. Okay. How many people here are farmers? How many people here lease to their neighbors, kind of, sort of? How many people here have a relative that manages that land? Okay? There's a lot of, I've often said that you see this phenomenon where like, maybe the not so successful family member stays and manages the parcel or what have you. There's no reason why this we should have, land should be a liquid and fungible asset. And so I think that's going to be the biggest thing that gets unleashed by these reforms. So hopefully.
Thank you, Mark. Ma'am, I think in our conversation we discussed NABARD recently has basically event about like they brought all banker together and do the conversation right for the right. So want to know like how bankers look at this space, right? So there is a priority lending. There is already a mandate for them to. So any view on that? How they are looking right now, and what are the way they are planning to basically serve going forward? There is any major changes they see, or as an opportunity perspective? This is little sensitive question, but just on the high level,
Very
if you can.
sensitive, difficult, dynamic, whatever we would say. There's no one answer to this. Though government keeps on framing a lot of policies, like you have this priority sector coming up for startups, you have for FPOs and so on and so forth. But then I think the banks also look at the ecosystem to be mature enough or ripe enough for them to enter and play. And I think we can't blame them also. They are also saddled with a lot of responsibilities and many other things. And I have seen the advantage of being in an NBFC since I've manned an NBFC and how it is in a bank. Of course, there is a resource crunch in an NBFC, but when it comes to operational freedom and many other things, it's much more comfortable over here, though of course they are also being brought under the RBI net. Coming back to how banks are looking at it, banks have always been looking at, Kisan credit card, interest subvention areas, small ticket loans. These are the loans which have been going on an auto mode, and first time loan goes and every year it just gets serviced. So we really don't know how it functions over there. Again, when it comes to this, I'm just bringing back another aspect of FPO again, like how NABARD set up its subsidiary to establish that yes, it is a bankable area and over 2,000 FPOs to the tune of about 600 crores has been lent. I won't say it's a big amount for India, but yes, it is a good enough amount for a new concept, and now it's no more new. Many banks are also entering into that field. Then NABARD has also set up a subsidiary which exclusively looks after the credit guarantee scheme for this funding to FPOs.
Okay.
And a majority of lenders have onboarded. And as I've said that parallelly, you have to create sensitization workshops and programs for bankers to. It's not only about FPOs and startups and government, these programs are also going on. And once the guarantee program, Rabo, it was one of the forerunners in coming forward to giving the credit guarantee. So NAB Samrakshan also has come forward and they have given to the tune of about 500 crores. That is a figure that I have got just 1 week back. So these are the aspects where the government, NABARD and many other players come forward to give a push and strengthen the hands of the banks. And definitely, as I say, agri is going to become agri-business with players like Arjun and Gram and, venture capitalists like Omnivore becoming more and more active in the sector. Definitely, the sector is going to attract capital from all sides, and I think bankers cannot stay back. And only very recently, when I had a agri-startup bankers conclave convened in my office. So informally, through the discussions, what I got to know was that they are ready to fund the startups, but then they are also caught up in the prudential norm problems, the classification of NPAs. So you cannot have the same model for all kinds of categories. The risk involved is different. So you have to come up with different financial products and a sort of a guarantee scheme for that sector too.
Thank you very much, ma'am. Okay, so now we can open for the question from the audience. Any question?
Thing, and how you have done for the vernacular kind of thing,
So
and especially are you taking the help of Google, Alexa, Amazon's Alexa voice enabled.
See, I'm not a technologist. I have a team that does it. So there are certain SDKs that are available. I'm first going to attack Hindi heartland. I am based out of Delhi. So if I do Hindi, I cover a large chunk. And I'm basically figuring out how do I reduce the number of transactions for my POSPs by using WhatsApp for Business. So where you can either chat and the chatbot gives you an answer. And if you're using the app and you can upload a lot of data just by speaking to it. So that's where I am. There's a rollout we're planning before the monsoon for that. Yeah. So, I mean, does that answer your questions?
Partially, but still I'm curious to know that vernacular thing like, okay, Kannada, Telugu, Tamil.
I have tested Hindi because I'm looking at somebody who speaks Punjabi, speaks Hindi, in Haryana speaks Hindi, in Bhojpuri speaks Hindi. So right now I'm only doing Hindi. So that's the first level. If I'm able to get usage in my Hindi heartland.
Even within Hindi also, there is a challenge of pronunciation.
Yeah. So that I've sorted. So I'm confident of Hindi as a voice, as something that can transcribe, so voice to text, text to voice. I've sorted that problem out. So I'm going to roll out for Hindi this year, see what kind of interactions do I get. And then the next one I'll attack is Marathi, because we are quite strong in Maharashtra. And there are these belts that we have level of penetration. If these two start working, then we'll go from language to language. It takes a while to train it.
True.
You know, the AI to train it, and you want accuracy, right? You don't want the wrong transaction to happening. And then accents, so.
Thank you.
Okay, any other questions? Yeah, I think backside.
Hi, good morning. My question to you, ma'am, about NABARD. I'm Balaji, founder of TrustFlow. Basically, we provide micro supply chain financing for agri products, especially the packaging and the distribution side. So, how we can connect with NABARD? Just we want to throw some light.
You are based out of Karnataka?
Yes.
Bangalore?
Yes.
You can get in touch with our NABARD office. You can rather visit them, and there's a department called FSDD. I'm just making it easier for you by telling you here.
Yes.
Even when you go there, you'll get guided, and you will be shown the path wherever you want to.
Thank you.
Yeah.
Hi, I'm Vineet. I'm from Dalbal. We've talked a lot about dealers, for instance, playing role, assisted tech, and so on earlier, and so on. One thing that we haven't touched as much is agri-businesses and corporates, right? Like there are lots of players already established, seed, fertilizer manufacturers, large spans of sort of dealer networks, and so on. And an average farmer today is still very much dependent on that dealer for many things, for instance, in their lives. So what do you think is the role that agri-businesses can actually play in furthering potentially inclusive fintechs, if anything at all?
So I think it's not in the best interest for the agri-business to be able to do that, right? What you're just talking about is bringing independence to the farmer, bringing democratic purchasing behavior to the farmer, right? As you may know, today when the farmer walks into the store, what they ask for, they're not given that. They're given what the dealer makes the highest margin on, right? Two types of agri-businesses. One are the ones that have been existent for a while, right? They give lower margins to their dealers because they have superior products, claim, unclaim. Now, those folks are interested in being able to reduce the prowess of the dealer in making the purchasing decision for the customer. Then there are folks who are kind of just starting out, giving very, very high margins to the dealers, and obviously there, they want the dealer to be able to influence that decision, right? But the freedom for the customer comes in when you're being able to give them ability to procure any product at any time from anywhere, right? And that comes through two ways. One is the availability of those products in those places, and two is the affordability of those products in those places, which comes in with financing, digital finance, things like that, right? So I think one has to kind of understand that, hey, who's incentivized to be able to actually drive that democratic behavior or purchasing behavior within the farmer? Right? Mark, anything?
Yeah, I'll top up on that. So I think when we talk about most agribusinesses, we're really talking about manufacturing companies, right? Either that or we're talking about, it's either pre-harvest input manufacturers, equipment manufacturers, or we're talking about post-harvest processors, originators, traders. I'm going to leave the latter group out for now because they're much less farmer-facing, right, and largely buy through agents and traders. And talk about the first group, and I've worked for two large ones, Syngenta and Goldridge. And just say that every manufacturer is trying to figure out what their approach should be here. And it's an evolving process. So for a long time, there was just ridicule, right? It was like, no, it's fine, we'll keep doing what we do. And then you see the rise of folks like Dehat and AgroStar and now others, which were initially kind of dismissed by the manufacturers, getting to the point where they can't dismiss them anymore. And so you've sort of seen, I would say, three different strategies here, or I would say two main ones. One is that many have just decided to partner with them. So when Dehat started, they used to have to buy from a dealer. Then they got to buy from a distributor. Then they got to buy from a regional sales manager. Now they have a key account manager with every large input company in India, right? So everyone's playing ball. Other manufacturers have decided to, try to build their own platforms, right? So UPL created Nurture.farm. The less said, the better. Sorry, I'm awful. Mahindra created Krishay. And some of these have been more standalone. Some of these have been more digitization initiatives where they're digitizing their own dealer networks, which is more embedded. So everyone's trying to figure out their strategy here. I think ultimately it will wind up with certain farmer platforms reaching scale that everyone kind of acknowledge and play with. And what the manufacturers ultimately do will be some mix of dealing with these new disruptors, but also having a bit more control and visibility through their own networks straight to farmers.
Okay.
Hello, Arjun.
I think we can take a last question if you guys are fine. There is one question from Anil.
Hello, Arjun. When you lend to farmers through input dealers as anchoring platform, you know the end use case. I also heard from your colleague that you also lend to dairy farmers. How do you ensure end use case? Do you really care about end use case of the loan amount, or you're okay with just recovery?
Sure. So I think that's a relatively easy thing to do, right? We transfer the money to the person who's providing the end use case service, right? So for example, if the farmer is going in to buy a pesticide from a retail outlet, which is of Syngenta, for example, right? We transfer the money either directly to Syngenta or to the distributor above the dealer/retailer, right? Now, when we work on the dairy side, we work not in a very open manner, right? We work in a closed loop, a kind of environment or an ecosystem, right? In an integrated play. So then we'll work with players who are providing the cow, who are providing the feed, who are providing the medicines, right? And we'll make the payout to them, whereas the product will be given to the customer. And I think that is one of the key differentiators in POS-based financing, where not only you're able to have visibility on the end use, but you're able to drive the end use so that there's no leakage of capital towards other uses and things like that. Thank you.
Okay. Thanks everyone for this. Thank you very much for, first of all panel member for your time. And I'm sure there are a lot of learning and the insights for the takeaways. Over to you, Pallavi.
Thank you so much. This was such an intriguing conversation.